Hello and welcome. You're watching a special show tracking trends right here on ET Now. Let's take the first headlines at this hour. Range-bound trade near 21K. In fact, Sensex is also off the 70K mark after briefly scaling that levels. Broader indices, however, are outperforming. PSU banks are extending their gains right now. Pharma is taking a big hit because of that 6% fall in Dr. Reddy's. And so our OMCs are coming under pressure. That's a ET Now impact after our exclusive news break. There could be a fuel price cut which could be there in the offing. And that's why 4 to 5% cut being seen in all the three OMCs. But the big story of the hour is our exclusive, which my colleague Ankur Mishra had actually brought out. That's Securities and Exchange Board of India, Sebi, may reduce the minimum ticket size for SIPs as low as 250 rupees a month. Remember, currently the minimum SIP ticket size is at 500 rupees a month. Ankur Mishra is here with more details. Ankur, fill us in.
Yes, market regulator Sebi is said to be working with mutual fund industry for rupees 250 SIP. Yes, you heard it right. Current minimum limit is 500 for SIP, that is systematic investment plan, which you can invest monthly or quarterly. Now that limit is considered to be reduced to 250. It could be a actual sachet movement as per the sources we spoke to. However, let me also make that clear that it is at a discussion stage with regulator. The regulator is just assessing the impact of reducing the SIP's minimum limit. What will be the implication? That study is currently underway by the regulator, and only after that, as a process, there will be draft guidelines, and finally the guidelines will be released by the regulator. But for now, the idea of bringing rupees 250 SIP is on the table. It is considered with the mutual fund industry, and remember, as far as the latest data released by AMFI, the AUM of mutual fund industry has touched 50,000 crore, and if you talk about SIP, that has also crossed 17,000 crore.
All right, thanks very much for that, Ankur. So the big question is that SIP starting from 250 a month could be a reality soon, and if yes, how will it impact the mutual fund companies? On the one side, many of them are listed now, and also will it in the investor activity will get a very big boost or not. So this is the discussion we are going to have with Nilesh Shah, MD and CEO of Kotak AMC, who's joining us on the show now. Nilesh, good afternoon. Thank you so much for your time on this show tracking trends. And the big trend which is happening is that SIP has become a household name now. It's there in the grocery list of everybody who's running a household. It appears that now Sebi may look at taking this step a little forward of higher inclusion and reducing the minimum size to 250 rupees. So on the one hand, we'll analyze the impact on AMCs. On the other hand, we'll also talk about the impact. Will it make a lasting impression and much more wider inclusion or not? Firstly, from the AMC side, a 500 rupee SIP, how economic is it? Or is it like the larger, higher SIPs book part of the book actually subsidize this one because there are costs involved? Somebody as a manufacturer of SIP, what would you say?
So Ajay, we have been running SIP for 100 rupee across our equity and fixed income fund. But as you correctly mentioned, it's a loss-making proposition for us. It's loss-making at two levels. One, typically people who are starting 100, 200, 250 rupee SIP are first-time investor into mutual fund, and where we have to do KYC. The KYC cost is almost 35 to 50 rupees per KYC per first-time investor in mutual fund. That means on a 100 rupee SIP, I actually end up paying 35% cost upfront. The second thing is related to payment mechanism. While on one side, UPI has instant credit with no cost, the NACH mandate or SIP, which is recurring in nature, has certain cost element attached to it. Put together, lower denomination SIP we are marketing and selling for financial inclusion. But ultimately, there is a hope that someday I will be able to move these investors from 100 rupees and 500 rupees to higher level so that it becomes a profitable customer. Sebi has taken a step in the right direction by ensuring that this minimum amount becomes across industry and not just few fund houses like a mutual fund. And second, hopefully we will be able to reduce the friction cost, the KYC cost, and the payment cost so that it becomes profitable transaction for the industry.
Fair point. But I want to understand how much does the small ticket SIP, and if we take it lower, would it have a higher impact? Because you already have a large part of it already at 100 level as a AMC in particular, in a specific AMC case. But does it make sense to take it lower?
Undoubtedly, yes. Ajay bhai, we have been servicing rich Indians, urban Indians. But who needs us the most? People who need us the most are at the bottom of pyramid. They are in semi-urban and rural India. 2 crore Indians have lost money in Ponzi scheme. And did they invest crores of rupees in Ponzi scheme? Not individually, but collectively. They all started putting 20 rupee and 50 rupee and 100 rupee and 500 rupee with the expectations that their savings will generate great return. Unfortunately, all those fly-by-night operators gave only pain to this bottom of the pyramid. Undoubtedly, in our SIP, there will be ups and downs. But at the end of the day, will they have better experience than Ponzi schemes? Will they get real return compared to bank deposits? Undoubtedly, yes. So SEBI's step is in the right direction. We truly need to create financial inclusion. Our services are required more at the bottom of pyramid than at the top of the pyramid.
So, a quick word before we go on the other side of the argument. I want to understand the velocity of SIP inclusion from your vantage point at Kotak AMC and also as an industry representative. Are you witnessing the number of people who are coming to the market via SIP, a major growth there as well?
Undoubtedly, yes, Vijay Pai. Every parent, the first advice they will give to their kids who are starting their professional career, beta, beti, ek SIP kar lena. SIP now has become part and parcel of urban India's and rich and middle class India's life. Everyone wants to save via SIP, and which is where we have now about 7 crore folios, giving us about 17,000 crore a month. Clearly, what we have achieved is good, but where we can go from a potential point of view, that's far, far higher. We have barely scratched the surface. There are 25 plus Indians who own a vehicle, whether two-wheeler or four-wheeler. All those people are potential SIP investors. We have touched just about 4 crore unique investors and 7 crore folios, but our potential is almost 40 crore plus Indians.
That's a brilliant point, Nilesh bhai, and probably that is exactly the reason why SEBI is also nudging other companies as well. Your, of course, AMC has been bringing down the minimum SIP level to $100, but others may also follow, and another yet nudge towards the industry for higher financial inclusion. 40 crore.
With equation getting in place from a KYC and transaction processing point of view, we'll go all out in marketing this SIP to bottom of the pyramid. Today, we have facility, but it's more walk-in customers. Tomorrow, I will start going and pushing it out as I don't incur loss while marketing this SIP.
That is the ask of the industry as well. So it's not that the industry is analyzing this product only from the financial side, but certain KYC and other arrangements also, if they can be brought down for the industry, you think then it will make much bigger sense for the industry to also respond wholeheartedly. Is that the point you're making?
Absolutely. No one would like to run a loss-making business for a long. Today we are doing this more as a experimentation with bottom of the pyramid and ensuring that our technology, our communication, and our services are up to their expectation. But once we put in place the KYC cost and the transaction processing cost, then the industry will go all out in marketing this SIP. My dream as a AMC CEO will be to ensure that there's no Indian who gets lured by Ponzi scheme, but all of them become my SIP investor, my industry's SIP investor, and secure their financial future.
Last question then, since we are on the subject of SIPs, you have seen SIP number swell from what 500,000 a month to almost crossing 17,000 now. What's the potential in our careers, in our lifetime interacting with each other in the industry? You think it can cross to much larger numbers per month?
Ajay bhai, I was just presenting on Saturday in Infinity conference at GIFT City, Gandhinagar. And we did an analysis since 2008 to 2023, where if you had invested in EPF or new pension scheme, vis-a-vis a large cap equity fund, the corpus at the end of 20 years, 2 decades, will be almost 50% higher in a large cap equity fund SIP compared to EPF or NPS. This is the potential of SIP. It can provide financial security to Indians. It can ensure that senior citizens can live with sar utha ke jiyo dignity. SIP is the perfect solution for an average investor or an ordinary investor to get financial security.
Clearly. Thank you very much, Nilesh bhai. Always a pleasure chatting about this subject with you on the channel. That was Nilesh Shah analyzing basically what will it take for higher financial inclusion via the chota recharge of mutual funds. Can it actually lead to a sachayization of the financial services or mutual fund industry in particular, which Ankur is also alluding to? But Nilesh believes that yes, it can happen. The direction is clear, but there would also be some amount of requirements from the industry side so that the costs of running these kind of offerings can also be shared, or it could be incurred by the industry. Let's take a short break on that note. While we take a break, also hear out Jonathan Garner, his view on India's. But we'll come back and discuss a lot of specific stocks with Sanjeev Bhasin on the other side. Don't go anywhere. All right, so let's talk about some of the queries which our viewers are reaching out to with, so that we can solve them for you with our experts. And Sanjeev Bhasin, of course, is joining us for exactly that. The first query, Sanjeev, is coming on Aditya Vision. A viewer of ours have bought about 1,500 shares of Aditya Vision at 3,000 rupees and is currently holding all of them. He wants to know whether should he add on to them or hold on to them. What kind of prospects does the stock look? What would you say to Srivastava, Sanjeev?
Well, he has bought a very, very good stock which has done extremely well. And I would say hold on, but keep a trading stop loss because large part of the rally may have already taken place. But definitely kudos to him for investing in a stock which has done extremely well. So book partial profit and try and get into some of the banks, but hold the rest of it and look for targets closer to 4,000.
Part profit booking, and you can let your some of the quantity run to 4,000, but the stock has more than doubled in the last 1 year, so that perhaps would be the prudent approach. The second query is coming on BPCL. Yes, oil marketing companies. BPCL, our viewer actually bought it at 357 rupees a share. Wants to know whether should he hold or buy more or sell exactly. And this is Sindhu, by the way, and is reaching out to us from Kerala. And there's a flip side of the question. Who also wants to know whether DLF is good entry at this price. He wants to flip out of BPCL, it appears. So two separate questions embedded in one.
So Ajay, firstly, congratulations to the viewer. He has invested in BPCL and he has made 100 rupees straight off. Last month actually belonged to the oil marketing companies who thought that 40 to 67% a rally will come in a month or month and a half. I still think they have miles to go, given that Russian distillates were sold at 15% cheaper. and in their crude refining, they can do both, the heavy and the light refining, which means their additional GRMs have been very strong. But yes, you are right. If you want to take some money off the table, it's very, very right, because I think crude can head higher. And DLF, even though it's hitting new highs, is poised to do very well, because they have exceeded their sales target, and their debt reduction in the last 2 years has been very, 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 very solid for return on equity improvement. So I would definitely think, but do a sip in DLF, because right now we think the market may be, over optimistic. You should look for some profit booking and then get into it. However, since you are, a long-term investor, put small amounts now and look for corrections to buy more into DLF.
Okay, fair point. So market appears on the higher side, so don't buy all the quantity in one go. Spread out your purchases over the next few months. That's the word on DLF from Sanjeev. Another query is on Union Bank. Our viewer has been holding 1,000 shares of Union Bank, bearing a loss of almost 17%. Wants to know whether these losses should be booked or held on to. Please advise. City Union Bank is the one we are talking about.
Okay, City Union Bank. So I don't know his entry point I'm getting, but City Union Bank has responded very strongly from that 121, on the back that couple of quarters they came out with weak guidance, and there was a additional provisioning. But this quarter the numbers were stellar, and they've the stock has rallied 120 to 160. Now at this point, I would say if you are not making money, then it is prudent to book out and get into a larger bank, an Axis, HDFC, or an ICICI, where I think the safety is more. There is a shift going on from some of the mid-cap stocks into large caps. But if you want to hold on, I think Union Bank has a much, much more secure picture going ahead. However, you have to recall that large part of the rally from 120 to 160 has happened in the last just 2 months. So prudent to book partial loss and get into a big name that will give you more safety and transparency.
And transparency at these levels. All right, Sanjeev, thank you very much for your time today, taking the queries of our viewers. Hope you benefited from that advice. Before we take a break or wind out of this show, here are Jonathan Garner, one of the very big strategists who watches India and emerging market very closely. In fact, he's the Asia head EM for Morgan Stanley, and here he is discussing growth in the Indian market and also the impact of the 10-year bond yields from US softening from their elevated levels. Listen in, and thanks very much for watching. Goodbye.
India is our largest overweight. It's a market that we have preferred over the last 2+ years, and we're certainly going into 2024 bullish. I think the rationale for that is superior GDP growth, nominal GDP growth of probably 12 or 13% over the next couple of years, and superior earnings per share growth. If you go back to early 2021, so I guess sort of 3 years ago, India's earnings per share have compounded to the extent of 60% in US dollar terms. That compares with essentially zero for overall emerging markets and minus 20% for China. And so this ability of Indian companies to deliver sustained earnings growth is extremely important for our bullish recommendation on the market.
Jonathan, given that we are at the peak of the interest rate cycle in US and the US 10-year, which is the most important indicator of which way flows would move, if the 10-year paper peaks out closer to 5 or 5.25, what implications do you think that will have for emerging markets in 2024?
Well, we think US 10-year yields have already peaked for this cycle, and they've started to fall as the disinflationary process gets going globally. What's remarkable about India is, compared to previous Fed cycles, how well India did, which is testament to a much improved current account and fiscal position. So we had very limited volatility in the exchange rate for India throughout the Fed hike cycle compared to what we've seen historically. As the Fed begins to cut interest rates by the mid-year of next year, we would expect the RBI to be broadly following the same pattern of